Hello, welcome to today's analysis of the NQ and a little bit of the ES. It's Monday, 25th of November. And first, let's take a look at what happened on Friday. Um, on Friday, I was talking about, where were we? We were in this little range here at the top 50% of the range for the entire week. And I was discussing the fact that we had a nice gap up internally and started creating structure just above a change of character. We had reasons to come down farther, um, but they took liquidity into a very small little block here. And that seemed to be enough for them to start breaking structure upwards for US. Um, US came into a little bearish pull that they had created before, took internal liquidity pretty nicely, and then we took a couple of longs based off this precedent. We took them in the premium live stream on Friday. So if you were there, you could have caught some nice longs for US. Um, I was mentioning that if they did start breaking up from this area, that we have so many targets above us, liquidity-wise, structurally, everything, that they probably wouldn't stop, and we would probably make our way up into higher time frame structure to fill orders, which is what they've done today. They've opened on Monday with a very, very strong gap up. Um, Leaving a lot of imbalances behind, a lot of liquidity. But this gap up, if we're able to maintain closes above this area, I would consider this uh, a large a large change of character, basically going up to the hourly chart and beyond. Um, so the thing about this is we have this huge gap that we've created, and we're able to come back into that gap and get bought up rather quickly and continue the move up. Um, but interestingly enough, Sydney opened here. Their low is kind of nested within US's price action, and this is from Friday. And Asia just seemed to range all day in a very, very tight range. The NQ kept taking liquidity to the upside. The ES not making any higher highs. So I would consider all of these basically SMTs. Um, so I would like to see uh, I would like to see support come in around the initial mitigation of the gap, which was around here. It was kind of Sydney's low before it led into the Japanese market. So this could just be considered Japan's pre-market low. Um, if we don't start getting support coming in around these areas, I would be rather careful about taking longs until this gap has been interacted with. Now, UK is going to be opening soon. UK will be opening in half an hour. Whether UK brings it down into the gap and starts accumulating in here, or they push it up a bit higher before US bringing it down, I don't know. But I can say that this gap down here is rather notable. Um, Now, if we start to temporarily base out up here, which is definitely possible due to the targets we have above us, I would like to see them come into the really large red vector that we have on the 12 hour and the daily. Um, I'd like to see some selling happening at that area for me to feel comfortable about perhaps shorting into the fair value gap that we've created on the strong open. Because of the momentum of this move and money flow being so thick, they can just take small bits of liquidity here and then keep pushing up. Right, it's a very fresh break of structure. Um, so where would I long? I mean, the fact is we have Hong Kong's low, which is situated on flat lows, which does seem to be a nice liquidity target for a potential continuation. But if we start breaking down below this point of control that I've marked here at 29.43, and we don't just take liquidity into this block and aggressively start making bullish structure, I feel like we could get a knife down into the gap that we've created, the opening gap. Because of the nature of the gap, I don't know where that could stop. Gaps can be filled very aggressively, um, and where it decides to keep going, I don't know from there. Um, I must say that there is a chance that if we don't get above that gap again, that we come back into this range and start reaccumulating down here. That would be a rather interesting situation, given that we just freshly broke structure. If we start making bearish structure internally and want lower and lower liquidity from last week, there's a chance that this Monday move, could be a false move. So that would be interesting to see. Um, yeah, that would be interesting. So US last closed down here, 28.53, which is before Sydney started pushing it up, and then price gapping up on Monday. Um, there is, I mean, this area down here, if we did end up coming down here, I don't know how long we would spend down here. This seems to be not not the strongest area, especially if Sydney's low gets taken. But that's more for US to do, I feel. If they're going to come down here, I feel like it would probably be US that would do that move. Um, Zooming out, what do we have kind of above and below us? Well, I was talking on Friday about this red vector. I've a lot of reasons to think that we can come up here. Now, how long it'll take us to get up here, I don't know. This fresh break is interesting, but we are coming into a macro bearish pull, which has been in play this whole time. We've just been ranging, right? This whole area here, there's not a lot of volume. So unless we like aggressively start creating strong structure in here to pull us up, like our last high volume area is down at the top of this gap, the top of this range that we were trading last week. So just be careful about this gap. Like I don't think I would play a lot of longs based purely off quick mitigation and continuation. I don't think that would be something I'd be really looking for. Now, I mean, if your strategy allows you to be able to do that, and your risk management's good enough, then sure, you could take that. We have a anchored VWAP that is kind of hovering around 28.92. So there is a chance that that could pull us up, but um, I think the move down into there would need to be very, very fast. It would need to be a very strong buy up from that zone if I was going to be thinking about longs from there. Due to how tight this range is, and the fact that these SMTs and these highs are not consistent across markets, I think there is a chance that if they accumulate in this zone around Japan's low, that we just end up expanding this range out. It's a bit early to be really sure about kind of what directions to be focusing on, right? It's the Asian range on Monday just happened. It would be smart to let UK and US um, kind of show us where the important points are properly, right? Hasn't been a lot of volume here in the Asian session, so it would be smart to let UK open, I think, and even you could even just let US open as well, and trade tomorrow once the stage has been set a bit more, right? This is a rather precarious little situation to be getting in on trades, but I do see a chance of them being okay with this little consolidation of Japan's low. Maybe they take China's low into liquidity here, have small reaccumulation to then kind of push up into that red vector area. That is possible. You can see on the NAS 100 instead of the CME chart, we did actually mitigate that 12-hour red vector. I would focus more on the CME chart. Like I would not consider it mitigated yet. Um, Above us, not even just immediately above us, we have a past daily VWAP around a 1 hour red vector, and above that we have a nice block around the 50% of the 12-hour red vector. As I said, there are definitely reasons that we could come up here to set some kind of lower high, um, but yeah, this aggressive gap up is something I think we just need to let play out, right? Um, to the downside, we still have the same things as last time, as last week. We have these wicks here. We have large vacuums of liquidity that we can tap into comfortably. Something to be cautious of. It seems like they did accumulate enough here to retrace this move, which I was talking about last week and the week before, really. And I said I would like to see them find support higher than, let's say, the point of control of this consolidation, like the source of the breaker structure. I'd like to see them push up beforehand, and that's what seems like that's what they're doing. Whether this little consolidation here leads to a very sharp pullback back into the range, or it leads to an expansive move to recover some of the drop, we don't know yet. We're gonna have to see. But the thing is, we're able to play these little pulls, right? So today I did try and take a little long from here. I got stopped out break even just because this price action was just way too choppy. It seemed like they were losing whatever momentum was going on from this push down. We seem to be searching for liquidity lower and lower in this consolidation. And depending on how we interact, as I said, with this area, Tokyo's low and Tokyo's pre-market, um, we could get a push up. Now, taking Tokyo's low and Tokyo's pre-market low, the thing about longing off of this is we just don't know where price could stop and be satisfied with the fair value gap mitigation, right? There's a chance it could cascade down, um, or there's a chance that they could just range it around there. Um, I would like to see price take clear liquidity that's been established above that gap to show signs of accumulation, maybe absorption around that area, and perhaps target this China's high up here. Now, China's high this is the micro E mini, so China's high is actually lower than this previous high, but on NQ itself, China's high is the apex of today's Asia's range. So if anything, I would be targeting that. I would be targeting that for a long if we do get into it. Maybe even up to 2982, just because that's the red vector mitigation area. And it would make sense that if they did really want to push up into that and fill some orders up there, that they would they would tap into that zone. Above us, we have a psychological number, 21,000 even. So if we do start getting very strong expansive moves up into that zone, I would kind of wait for one or two of my blocks here to start becoming relevant. So maybe on around 21,060, or I have one up here at 21,100, which relative to this zone, I think is the value area low of this initial break of structure. Yeah, it's a value area low. We have a naked point of control way up higher, but that's going to be really interesting. If we make our way back up to that consolidation, which happened, the distribution after the elections, that would be really interesting. I'd be very very careful to see what kind of price action they give us up there, just because the implications of that are we could actually just make a macro higher high, which would be kind of crazy. But look, let's just play the norm the let's just play the local pulls that we have at the moment, right? We have reasons to keep coming up. We have a fresh gap. Whether they come back into it today or they leave it maybe for Wednesday, I don't know. But there is a chance that we can just find some support around here and keep pushing into the liquidity made on the drop down, right? ES is looking very similar, but as I said, like we have SMTs going all the way through today's session. Like uh, ES was making lower lows, NQ was making higher highs at the exact same times, which could be interpreted as you could use both of them as an oscillator, right? And go, okay, well that's a divergence. One of them is doing the opposite of the other. Whether that means that we want to come back into this gap immediately or not, I don't know. I'm going to wait for UK to open and develop a bit before I start taking any trades. I think this kind of situation, like, look, we're literally floating up in the middle of nowhere. Like, this is, it's kind of a sensitive area if you're going to be taking trades now this Monday. So US could give some nice reactions based on the price action that UK gives today. As of the local high, which was around Tokyo close, we started making bearish structure, breaks of structure downwards. The initial break of structure after the mitigation of that gap is, as I said, around Tokyo's low and pre-market low. So I would like to see some support come in there. But this whole area is very low volume, so just be careful. Just be careful if you're trading up here. I think that's it. Let's have a look at the DXY. DXY has broken the range that we've been in for since February or January, which is really interesting. Whether they start selling off dollar up here or not could definitely have some implications for the whole stock market itself. This push up was full of gaps, full of inefficiencies. We've left a lot of liquidity here. But the dollar can sometimes surprise, and especially with the new elections and the new president being sworn in, it could be give us some surprising moves. If the dollar keeps pushing up and the stock market doesn't, then we could see some kind of heavy retracement on the NQ. But the thing is, we're actually able to do that because of the last week and this whole range that we've developed. We're able to come heavily back into this range, swipe some liquidity, and keep pushing up, right? And that would just be locking ourselves into a range for a while, and a slow grind up, perhaps up to that initial break of structure. But we'll have to see. We'll have to see what they do. So yeah, I think that's it for me today. We're hanging out at anchored VWAPs. Definitely could see some selling coming in here. I don't know about shorting directly after we mitigate that red vector, but if we start breaking up in this structure here, I would long into that precedent, that idea, that supply that we have up here. But taking shorts, I'd also be a bit cautious. I might wait until higher areas have been hit. So